Welcome back to the Good to Know this week. Again, my name is Maddie. I'm one of the tax attorneys here at Pure Tax. This week I just wanted to briefly talk about one of the common resolutions that we go through with our clients, and that's currently non-collectible, or CNC. To get in that status, you have to submit a financial statement with the IRS. Depending on your case, it could be a basic 2-page document, or it could be a multiple-page document that's very detailed. Basically, the CNC status just stops the IRS from doing any kind of forced collection action against you. The financial statement that you submit goes through your assets, bank accounts, property you own, cars, and then it'll briefly talk about any kind of available credit you have, maybe on credit cards. And then if you own a business, it goes through some details pertaining to your business. And then it goes through your income, your monthly income. You do have to provide substantiation for your income. So if you're a W-2 wage earner, you just submit a pay stub or something similar to that. If you have self-employment income, it gets a little bit trickier. And then it goes through your monthly allowable expenses. Now, as I previously talked in my last video, the IRS has caps or standards on each category for these expenses. If you go over on any of those expenses, you do need to be prepared to provide substantiation for those expenses that you actually pay. So a lot of times people will submit bank statements that show how much they spend on each category per month. At the end, they take the difference between your income and your expenses. If you're close to zero or in the negative, then you qualify for currently non-collectible. Now, the catch-all is when you get into this status, the IRS will automatically attach federal tax liens to any kind of assets you owe. So some clients are okay with that, some want to do everything to avoid that. It just depends. That's pretty much currently non-collectible in a nutshell. Of course, there's many other things that could affect that, but that wraps it up pretty much. So thanks for listening. Stay tuned next week for the Good to Know.